So what are the objectives? So in a simple term, objective of financial statement is to provide a snapshot of the business to the users or the shareholders of the company. That's it. So that snapshot, when you keep on talking or expanding, then the financial statement will give you how the performance of the organization for a given period of time. Maybe 1 day, 1 week, 1 month, 3 months, 6 months, or even 1 year. And then it also will give you the position, as I told you, mirror image. Stand in front of the mirror and then you find out what is the image of your business. How much is your assets are, what are your liabilities, and what is the rest, the equity, the owned by the founders of the organization, the residual interest of the business. So, some of the different purposes they said: decision making about providing resources, identifying resources and claims, assessing the prospects of future cash flows, influencing management action, estimating the value of entity. Now, I don't know, I'm sure all of you might have come across business valuation, feasibility study, also assessment, budgets, plans, all that. These all in order to produce, we need the historical financial statement. And also we have tax. You know, the tax man, he is very serious. He will not let us sleep peacefully. So then we have to prepare our financial so that even the tax authorities are mindfully not disrupting us. What are the qualitative characteristics? One is relevance, other one is faithful representation. I will be sharing the material for your information, no worries. But yet, if you need to take pictures, feel free to do that, because the reels are very expensive, right? The picture reels, I said. Okay, anyway, we have relevance and we have faithful representation. What is the concept behind relevance? How relevant this transaction to this particular case? And then we had to think about certain important perspectives or aspects.
Union City. Excuse.
Matters, or when we discuss about relevance, that particular transaction or that particular cash flow, or how I can get the very much from the estimated value, then we move on to confirmatory value. How sure this particular attribute carries this much value. For example, I would estimate for the next 6 months a cash flow of $10,000 a month. Now, and then we just saying that every next future months, month 1, 2, 3, 4, 5, 6, each 10,000. So what is the today's value of this? I hope you would have come across something called present value, time value of cash, discounting factor. Based on that, you arrive a confirmatory value of this. Then we also talk about materiality. Now, what is this materiality? Now, is the materiality a absolute term or a relative term? Is $5 is very important or $5,000 is important? What do you think?
The big one.
The big one.
The big one.
If I change the scenario now, $5 out of $6, 5,000 out of 5 million, which is important now?
$5.
$5 is important, right? So materiality is not on absolute terms. materiality is on relative measure. You got to compare. See, I am 5 feet 6 inch. Am I that tall? You can't say that. You got to compare with Mr. A, Mr. C and myself. If Mr. C is shorter than me, then I can say that I am taller than him. Or when come to Mr. C, he is 8 feet. Then I am very short compared to him. So materiality also same like that. So, you know, let's say steal of money of 2000 riyal. Take an example like this. Steal of money, 2000 riyal. No, I won't say steal. Let's say error, an accounting error of 2000 riyal. Now, is this material or not material? Now we need to ask the question. I will now give you two scenarios. One, this accounting error in a boutique, every day total sales of 1500. There are per day sales 1500. In this, there is an accounting error of 2000. There is another scenario, total sales per day is 10 million riyals. An accounting error of 2000. Now you tell me, this 2000 is material in which scenario?
First one.
First scenario. In the second scenario, no point of spending time searching for that accounting error. Now I will reverse the scenario. The 2000 steal of money. When come to certain characteristics or types of item, no matter the size, 2000, if it is steal, you have no choice. Even 10 million riyal business, someone is stealing 2000, you go to take serious action. Is that clear?
Yes.
So that is about materiality. And then we have faithful representation. We everyone have our own faith with regard to our religion. Preparing financial statement also carries certain amount of faithfulness. There are three matters. Completeness. 80%, 90%, 95% still incomplete. 100%, then only it is complete. And then neutrality, no bias. You are not favoring the finance director or you are not favoring the marketing director when producing the financial statement. And last, free from error. So that is faithful representation. And then you also do have additional 4 characteristics: comparability and consistency, verifiability, timeliness, and understandability. So these characteristics must be there in my financial statement. In summary, that's what I wanted to say. Is that clear?